The Australian share market has received another round of negative leads as ongoing fears over Japan's nuclear crisis sent US stocks tumbling. Japan temporarily suspended work at the stricken nuclear plant and evacuated the site after a surge in radiation levels made it too dangerous for workers to remain on site. Markets were further hurt by ongoing political unrest in the Middle East, with Bahrain's King Hamad declaring a 3-month state of emergency in an effort to deal with increasing protests. An hour into trading, the ASX 200 index is 27 points or 0.6% lower, following the trend from overseas. Australian uranium companies are losing ground again today after China halted approvals for all new nuclear power plants pending changes to safety standards. China was embarking on the world's biggest nuclear expansion program, and this shift towards caution is making investors wonder whether demand for uranium will be sustainable. The European Union's energy chief announced yesterday that he didn't rule out a worsening of the crisis in Japan, and should this occur, the future of the uranium sector might seriously be in doubt. Emerging uranium producer Extract Resources is trading down 21% at $6.66, as investors fear that the Chinese bidder might back out of a potential takeover deal. And in company news, iron ore developer Sundance Resources has more than doubled its estimate of iron ore at its Central African project on the border of Cameroon and the Republic of Congo. Total resources have now risen to 484 million tonnes, with a 61% iron ore content. Sundance CEO Casella announced that the project will be capable of producing 35 million tonnes per year for at least 25 years. The feasibility study on the project is expected to be completed by the end of the month. The company's shares are up 8% at 46.5 cents. And on the currency front, the Australian dollar has weakened sharply in overnight trade and is currently buying 98.04 US cents. This is Sarah Holtmann for Young Stockbrokers.